If you currently own a home but you're looking to buy a new one, whether you're upsizing, downsizing, or just changing locations, what's the best way to go about this? In this video, I'm going to go over exactly that because unfortunately there isn't a one-size-fits-all approach. And you're actually going to have a variety of different options and you have to figure out which one best suits your needs. And we'll get right into it in just a minute. What's going on, guys? My name's Alex Dunbar and I'm a local realtor based out of the Greater Vancouver area, and I make educational and community tour videos every single week. So if that's something that you're interested in seeing more of, I suggest you consider subscribing to my channel. But the topic for today is buying and selling at the same time. And the best approach is really going to depend on a variety of factors. And the primary factors being, what is your buying power? What sort of a move are you making? Whether it's an upsize, downsize, lateral move, or something else. What type of market are you in? And what is your level of risk tolerance? So the first step in the process is to have your real estate agent or a real estate agent of your choosing give you a CMA, known as a comparative market analysis, so that you know what the value that your home will sell for. Now, my suggestion here is to always be more conservative. For instance, if they give you a range of $800,000 to $850,000, you're going to want to use the bottom end of that range. The reason being is that if you overestimate and you don't actually get the sale price that the mortgage broker ends up using to calculate your finances, you're going to be in big trouble because you're going to be shortchanged that amount of money. So it's best to always use the lower number, and if you end up selling for more, great. If not, you're not going to put yourself in a bad situation. So once you've got those numbers, then you're going to want to go and get pre-approved by a mortgage broker or a bank. So this is where they're going to collect documentation from you, such as your income, your debts, your assets, and your credit score. Based on this, they're going to be able to tell you what your buying power is, or essentially how much house you can afford. They're also going to take into account what your estimated sale price will be after all of your closing costs and what that remaining equity is going to look like. They can also give you options potentially if you have the ability to buy a new house before you sell. Now, this is obviously going to be the absolute ideal situation. It's not a reality for most people, as you're going to need the money from the house that you're currently in order to purchase the next one, as well as reducing your current mortgage costs in order to qualify. Because carrying two properties at the same time not only is expensive, but it's also going to reduce your buying power due to your current mortgage. And if you don't currently have a mortgage broker that you're working with, I'm more than happy to make a recommendation. I have some fantastic options that can service you right across the country, so don't hesitate to reach out and I can send that information over. So the average person isn't going to be able to just purchase their next home without selling their current one, so let's go over what your options are. Option number one is to sell before you buy. This means getting your property ready to sell and onto the market prior to looking and buying your next one. The biggest benefit here is you're going to know exactly what your affordability is on that next home based on the sale price of your current one. Not only that, but you're going to be able to write stronger offers, not having to worry about the sale of your current home or the risk of it not selling. The downside, of course, is that you could potentially be on a tighter timeline if you're trying to line up the dates of when you're moving out of your current home and moving into your next one. Or alternatively, you're going to have to rent a space in between or stay with friends or family. This is generally the approach I suggest in a slower or even a more balanced market where homes are taking a little bit longer to sell. Now, one thing I want to make very clear here is that selling your home before buying doesn't mean that you're waiting until the home is actually sold and the money has been transferred. What this actually means is after your subject removal period, once the subjects have been removed by the buyer and you've got dates set out for when you're going to be completing on the sale of your home, it's after this period of time that you can actually go out and start shopping without having a subject to sale. So let's say your home goes to the market and you've had it listed for a week. And after that week, you receive an offer which you accept. They're then going to have, let's say hypothetically, a 7-day subject removal period. And at the end of those 7 days, if the buyers choose to remove subjects and then submit their deposit, it's at this point in time where the sale is going to be firm and binding, and and you can then go out and look for your next property. I see a lot of people make the mistake of thinking that they have to wait until the home has actually been sold until they go out and purchase their next one. And this just isn't true. So ideally in this situation, most of the time you're going to want to get longer dates for the sale of your house, probably somewhere between 2.5 to 3.5 months. This will give you enough time to go out, find a new property, get an accepted offer on it, and then try and line up those dates with the sale dates of your home. However, I always suggest having some sort of backup plan in place just in case you're not able to line up the dates, because just because you have enough time to line those up, the seller of the property that you're buying may have other requirements, and this is always a conversation, but in order to get the house, this can be part of your negotiation strategy. But you also just don't want to end up in the situation where you're forced into buying something you don't love because you run out of time. So whether that means staying with family or friends or having a short-term rental option lined up, this is something you want to make sure you've explored. Now, another potential strategy you can explore if you're selling first is to negotiate a rent back option. This means that you have the ability to rent back your own home from the new buyer for 30, 60, 90 days or something otherwise agreed upon. And while in theory this may sound like a great option, it's not necessarily something that a lot of buyers of your property are going to want to partake in. When it's an extremely busy market, sometimes you may have a bit more flexibility here because there is a little bit more desperation for buyers and they are more willing to go with the terms that you're looking for. However, in a slower market where there's lots of options, this is definitely a tougher one to get across the line. But it is a potential option and something to consider. Now, a third option when you're selling first is to actually have a seller's clause that is contingent upon you finding a suitable property. So essentially what this means is that there's a clause in the contract that you would add after the buyer has submitted it, or you let them know prior to, that basically states that they cannot go through with the purchase of your property until you found a suitable property that you're looking to buy. So once again, this sounds like an ideal situation, but you have to look at it from the other party's point of view. And why would they enter into this contract knowing that they could just be held up for a long period of time, and if you don't actually find something that's suitable to you, they basically don't end up getting your property. And that basically puts them in a state of limbo where maybe other properties are coming up that they may want, but they really don't have the ability to back out of the current deal with you, and they're kind of just stuck. So can it be done? Yes. But are there some drawbacks? Of course. So again, it's just a conversation to have, and you have to look at the pros and the cons. Now, moving on, let's look at the other side of the coin if you're to buy before you sell. So this means that you're buying a property before you sell your current one, assuming that you need the funds from your current home in order to fund the purchase of the next one. How exactly can you go about this? Well, option number one, which would be the riskiest option, would be to actually buy the property or remove your subjects prior to selling the current home that you're living in, with the hopes and expectations that you sell the current home you're in prior to completion date. So the obvious risk here is that your current property doesn't sell by that time or doesn't sell for the amount that you were expecting, and you have a shortfall in the amount of money that you're able to put towards your next purchase. Now, there are certain strategies we can use in order to make things work out even if your dates don't perfectly line up. For instance, something like a bridge loan. Let's say that you've lined up a purchase for your next property before you've sold your current one. The dates get a little bit too far extended. You end up selling your property and having completion after the time that you're purchasing your next one. Of course, how exactly do you get the funds from that one in order to purchase the new one if you don't get the funds until afterwards? And in a situation like this, we would use something called a bridge loan, which essentially bridges the gap between the time that you're purchasing the new home and you're selling your current one. And so essentially, this is a short-term, high-interest loan that allows you to bridge that gap. Now, my suggestion regarding buying before you sell is generally only in a very hot and competitive market. The reason being is that you want to make sure you've got your next property lined up before you sell your current one, because your current one is going to sell fast fast, and you're going to have a very clear understanding of how much it's going to sell for. But if you do these in reverse, you could potentially end up homeless if you don't have good options lined up, as well as the fact that in a market like this, prices are typically increasing. So if you aren't buying before you sell, you could actually be paying more at the end of the day and selling for less than you could have. Now, another time where this may make sense is where you're making a move to a different market or different property type, and there's a high demand for the type of product or the home that you currently live in, and you know that you've got a nice gap, or you're purchasing something that might be significantly less money than what you're living in, and this gives you some nice margin to play with. So once again, you're able to go out and make sure you get the home that you want without being rushed, and then still take advantage of the rising prices and hotter market for your home property type. Now, the second way to go about buying before you sell, and unfortunately the less favorable way, is to use a subject to sale clause. Essentially what this means is that when you're writing offers, you're going to have a clause in your contract that states the purchase of this home is subject to the sale of your current one. So once again, in theory, this sounds ideal. You can line up the purchase of whatever you want and not have to be rushed there. However, having the subject to sale is actually going to have quite a few downsides that you might not be aware of. So number one, it doesn't make it a very strong offer in the seller's eyes because there isn't much certainty there. The reason being is that this ties up the seller's home to some extent, whereas they could have other buyers that could come in and purchase it, but because it's got the accepted offer with the subject to sale, they're essentially waiting for your home to sell. And so personally, as an agent, when I'm representing my clients, I want to make sure that number one, they are ready to go, that either the home is already on the market or it's going to be on the market within the next couple of days. And number two, that they're going to be priced appropriately. I don't want my clients on the selling end to be held up because the buyers have put out this astronomical dream number to sell their home for, because yes, in their world, that's the ideal situation. But in my world, as the seller, it's really not that great. However, with a subject to sale, what you have to understand is that there's always going to be something known as a bump clause. And what a bump clause is basically states that if another buyer comes and writes an offer that is deemed acceptable by the seller, it doesn't even have to be higher. It can just be better terms, better dates, whatever that may be. They can invoke this clause on your offer, and then generally it's going to be about 48 hours that you have in order to decide if you want to remove subjects or not. So if the home that you're living in hasn't sold yet, or maybe it has an accepted offer but the buyers haven't removed subjects yet, you're going to have a very difficult decision on determining whether you're comfortable with removing subjects in your purchase or not, because there isn't a guarantee that your home sells. And so while originally in theory the subject to sale clause sounds great, there's a lot of things that you have to consider and think about before going out and trying to buy with this, because even if you do find that perfect property and you are able to get your home on the market and for sale, there's a lot of things that can still unfortunately potentially go wrong, and it's not a done deal. Something else to consider is that when writing a subject to sale offer, most of the time you're going to have to pay a premium on that home. The reason being is that the seller doesn't want to tie up their property for less than what they were hoping for. That means in order to give you the term that you're wanting, the subject to sale, you're going to have to give them something that they want, and usually this means the price. So if you're going out hoping to score the deal of a lifetime while writing a subject to sale offer, you may as well forget about it, because honestly it's just not going to happen. Now, I personally have some certain tricks and strategies that I use to help my clients when they are purchasing subject to sale in order to buy them some more time. However, those secrets are just too good for this video and are reserved for my clients only. So if you do want to hear a little bit more about those and how we could potentially use those to help you buy with a subject to sale clause, you can scroll down and click the first link in the description to book a call with me at a time that works best for you. So now that you got a better understanding of what your options are if you're looking to buy and sell at the same time, you're really just going to have to weigh the pros and cons of each situation, take into account what's going on in the market, and at the end of the day, understand what your level of risk tolerance is. Because even if I can give you the perfect strategy and what's going to work best for your situation, are you going to be able to sleep at night? Is this something that you're okay with? Regardless of the situation, you're going to have pros and cons. There's going to be risks to either side of it, but it's something that you have to be able to stomach. And so that's why I say there isn't a one size fits all approach. Even if there's a situation where I can make a suggestion that is going to benefit you the most financially and put you in the best position to have the greatest outcome, at the end of the day, if that's not something that you're comfortable with, although there is going to be discomfort in every situation, you just have to figure that out for yourself. So hopefully this gives you a better understanding of what your options are. Do you have any questions? Don't hesitate to reach out. Leave a comment down below and I'm more than happy to get back to you as soon as I get a chance. Before you get out of here, make sure you check out another video on my channel and we'll see you in the next video.